In this session we are talking about orders. Orders are a very important factor to get good profits. Orders reflect directly to your monthly profit goals. Choosing better orders can help you reduce slippage. In this session we cover MISCNC, stop-loss orders, bracket orders, limit orders, market orders, cover orders, GTT orders, and aftermarket orders. MIS orders. Market intraday square. This type of order will square off automatically at closing. CNC orders. Cash and carry orders. This type of order is for more than one day. GTT orders. GTT means good till triggered. Unless and until the price is not triggered, the order is not filled. Market orders. Immediate buy and sell execute in market orders. Execute near the latest bid ask. Cause of not any condition. It gives 3 to 4% slippage monthly. Limit orders. In limit orders, buy or sell execute only at triggered price. Cover orders. Cover order means entering at market price and exiting at trigger price. In this type of order we have to give the exit trigger price. Next, bracket orders. In bracket orders, entering and exiting price is pre-decided. For taking a better trade, this type of orders are very useful. Aftermarket orders. If we want to get into the trade after market hours, we can go with aftermarket orders, where we can take trade. Thanks. We are one profit.